All right, everybody, I'm going to talk to you today about Ethereum. We're going to be utilizing the moving average channel strategy as well as my valuation with trend strategy, otherwise known as the ducks in a barrel setup strategy. So we're going to look at two time frames here, starting with the moving average channel. We're going to look at the monthly. So the monthly is bullish. So what this means is we've had two consecutive closes above the high of the MAC, which is this thick black line, and then the 57 period moving average here on the Williams Accumulation Distribution Index is the gray line. We can see that the index itself is closing above this level. So this means this is still a bullish market. Any pullbacks into or below the low of the MAC, which is this thin black line, are valid places to look for entries. So what that means is right now, Ethereum is in a great place to buy, with our targets to the upside being, well, first of all, the low of the MAC, which has had a hard time breaking beyond, but then the middle of the MAC, which is about a 20% up move from here, and then the high of the MAC, which is a 35% up move from current price levels. So what this means is if we do get a confirmed daily trend change, it is a valid place to go long. We actually did get a valid change to the upside on Ethereum here back in mid-October around the 17th. We had two consecutive closes above the high of the daily MAC, and then we also flipped bullish on the Williams Accumulation Distribution Index right here. So theoretically, this market has set up for a long, and it is triggered into a long. So our targets again are somewhere around 3,000 and up at 34.22. So that's on the monthly. Now, the only thing that's not great about Ethereum is it's not seeing alignment with the weekly time frame. So let's look at that. So we see here on the weekly, we've had two consecutive closes below the low of the MAC, as well as the Williams Accumulation Distribution Index closing below its 57 period moving average. So that means that this is actually a bearish market on Ethereum. And you'll see here on my right chart, this was a chart that I posted on some of my accounts for people to see that this was a short setup because we're at the high of the MAC trading, and the target was the middle of the MAC and the low of the MAC. And we can see that we've hit the middle of the MAC, and last week it came down to this level, but we'd have to see it come down here now to 23.82 to hit the target. So what this means is the monthly is bullish, and it's a valid place to look for longs on the daily time frame. The weekly remains bearish, however. So generally speaking, lean towards the higher time frame being the right time frame. So the monthly time frame holds more power than the weekly. So I would not be surprised if Ethereum does go up based on the monthly still being bullish. That being said, any time we trade up into 26.36, it's a valid place to look for shorts on the 6-hour time frame. So kind of a mixed bag of signals here, and depending on which time frame you want to trade will depend on which levels you're going to pay attention to here. If you're trading weekly, well, we're going to pay attention to 26.36 and above as good places to look to go short, which is what happened here last week. If you're on the monthly time frame, well, then you're just in the perfect spot right now to just start going long and target middle of that moving average channel on the monthly, which is around 3,000. So that's what I'm seeing on Ethereum on the moving average channel perspective. Little bit of bearishness on the weekly, but still bullish on the monthly. Now, how about a valuation with trend analysis? So you may know this as the ducks in a barrel strategy setup. So what we have is, generally speaking, the moving averages are sloping up and away from each other. Generally, it's not as strong as Bitcoin, but still. So what we see is we are undervalued relative to the price of gold and treasuries. So that's step number one in this strategy. Well, actually, step two, we have a strong trend. Then we need to see undervaluation versus gold and or treasuries, along with, at the same time, an oversold reading on the stochastics. We have 2 out of 3 ingredients. So what we need is for this market to pull back more, and for this oversold reading to come in for us to be validated to look for valuation with trend or ducks in a barrel setups. But generally speaking, still on this perspective, dips are for buying. So overall, a bit of a mixed message here for you to digest. And again, it's going to depend on which time frame you have the time to trade. So if you have the time to trade the daily as your entry time frame, don't worry about what the weekly is doing. Focus on the monthly as your high time frame to identify those levels to where you'd like to do the business. If you have a bit more time on your hands and you can focus on the charts more consistently throughout the day, then using the weekly isn't a bad idea either. And the 6 hour time frame, for me, it moves actually pretty fast because I have a lot of things on the go, and 6 hours is too fast for me. But maybe that's because I'm slow. I don't know. But anyways, the if you are focusing on the weekly levels, don't worry about what the monthly's saying. Just focus on that. So hope this was of some use to you guys. And if you have any questions about how to trade this sort of stuff using the moving average channel or evaluation with trend, feel free to shoot me a message. I'm sure I could help you. And I hope this finds you well, and have a good rest of your week, everybody. Thanks for listening.